Silvergate's been having some problems ever since FTX exploded and the general crypto market went down. According to a new report from Bloomberg, they have been talking with FDIC about potentially salvaging the bank, including getting a line of credit from other crypto investors in the space. It's a pretty big knock for Silvergate, which of course has been going through the throes as FTX, one of its largest users, was wiped out in November after it filed for Chapter 11. And then over the last few weeks, we've seen a bunch of different companies decide to move away from Silvergate, including the likes of Gemini and Coinbase. Silvergate was known for being one of the few crypto-friendly banks, and a lot of crypto companies took advantage of that with billions of dollars of liquidity flowing into the La Jolla-based bank. But it's going to dire straits. Seems like if the token goes down 90%, so do the banks, and we might see one of the first wipeouts for the crypto banks out there. Zach, I want to throw this one over to you. You did a lot of editorial coverage on crypto banks over your years at CoinDesk. What's your take on Silvergate and everything going on there?
Yeah, it's a dicey situation, right? They're one of the few banks to serve the crypto industry early and often. I think a lot of people are hedging their bets, right? We've heard from various exchanges and various crypto firms who are saying, out of an abundance of caution, we're establishing other banking relationships beyond Silvergate, right? Signature, I think, is being the primary beneficiary of some of these moves. But there's not really that many banks that serve the crypto industry. So for Silvergate to be potentially in trouble is something that is worrisome for a lot of industry participants. And I think it is important to remember that, whether it's real or not, this idea of Operation Choke Point 2.0 unfolding behind the scenes with this pronouncement from banking regulators at the federal level is something that is a broader fear that people in the industry are also worried about, right? If the U.S. government can sort of stifle crypto innovators in the U.S. by limiting their access to banking services, that's something that becomes sort of a weapon in the regulatory push to both crack down, clamp down, and potentially expel some of these crypto companies from the U.S. itself. So I think that is really important to keep in mind in the background here is that, if this longstanding partner of the crypto industry in Silvergate is crippled or can no longer continue, that's a problem. But additionally, there may be signs, again, with this joint pronouncement in January, that those who would rush to fill that void may no longer be able to do so simply because it's too risky of a proposition relative to their relationship with federal regulators. So I think that's sort of the subtext of what's going on here. The fact that they're reportedly working with the FDIC to figure out what comes next probably isn't comforting to a lot of people who are doing their banking through Silvergate. So it's going to be interesting to see if this comes to pass, if this really pans out. But certainly more troubling signs for Silvergate and those who do the banking there. Interesting to watch. Jen, what do you think?
Yeah, it will be interesting to see if there are any crypto firms that are able to come to the table here and help Silvergate raise some funds so that they can up their liquidity. This is based on a story by Bloomberg, and this morning on Bloomberg TV, they said that if this was put into receivership, this would be the biggest bank failure the FDIC would have to deal with since 2010. So I think that gives us a little bit of context as to maybe why the FDIC is stepping in here to help them raise some money and keep this bank afloat. If we put it into context with some of the numbers, Silvergate has more than $10 billion of assets. They reported a $1 billion loss in the fourth quarter last year. That's when the FTX bankruptcy kind of all started to unfold. And if we compare that to their average profit per year before that, that was at $40 million a year. So they are definitely in dire straits. We can definitely see why the FDIC would step in here. And I don't know, Zach, I'm very curious if they will be able to raise enough money to increase their liquidity and remain a prominent bank in this space. I always think back to what Hester Peirce said at the beginning of this bear market, and it was maybe we should just let the companies that are going to die, and see what is born from that. Will, what do you think?
Yeah, to butcher a witty tweet on the subject I saw, which was that in 2010, crypto was born in order to take out the banks, and now we're actually doing that, right? A few years later, we're taking out the banks, but not in the way that we thought we were going to. A lot of these banks are now collapsing in on themselves. And I think, Jen, to your point, this is only happening because a lot of these crypto exchanges and people who were using Silvergate, they don't need to necessarily, right? So I think they would be willing to put capital into Silvergate if they necessarily had to. But luckily, there are a few alternatives. The real worry here for me is, what if those alternatives also collapse or choose not to work with crypto anymore. We've seen a few banks actually decide to do that over the last few years, few months really, since Three Arrows Capital, Terra Luna, FTX. They've decided they don't want to have any part of crypto. And so they decided just to move away from the industry entirely. The Silvergate incident is a little bit larger than that, right? A total collapse of a bank. I doubt we see another incident like that. But I wouldn't be surprised if there's other banks that decide like, hey, we have stable returns elsewhere. We have other clients. Why are we focusing on this very volatile part of the finance industry? It's not something that banks like to do anyways. So why cater to those people? And I think we could see a future where there's more banks deciding not to work with crypto. And then we have more choking of these cash flow points for all these larger crypto companies. Let's hopefully not see that come to fruition, though. Zach, I'll throw it to you as we go to break.
Yeah, interesting times in the US as it relates to what crypto will look like here. I mean, this is a big one to watch.